What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are back with everybody's favorite series, at least in my opinion, crazy wins, losses, trades, courtesy of Wall Street Bets on Reddit. So if you are excited for today's video, as always, make sure you like the video, subscribe to the channel, and as always, turn on the bell notifications for all future uploads. Now, again, these videos are made with the intent of education, and it's all anonymous for people on Wall Street Bets, unless they obviously want to, take ownership for it, which you don't have to. Again, the point of these videos is just to bring educational awareness, my thoughts, my ideas. But again, as a reminder, I am not a financial advisor. This is not financial advice, but let me tell you, there's some crazy trades that were happening in the last week. So we're going to get right into it with the first person here. This first person has a $919,000 Meta YOLO. So Meta platforms had their earnings last week. Stock fell down because their earnings per share missed, but their earnings per share missed from a one-time payout they had to do, which was like $15 billion or something like that. So stock fell down like 7, 8, 10%. I don't know what it was at close yesterday. But this person went right in and was bought up the dip here. And you know what? I don't hate it as much because he bought shares. He bought 1,417 shares. That's a lot of shares. Now, as you are selling these shares, as you are buying these shares here, what I would suggest you do to kind of offset your cost basis if Meta continues to come back down, could look up potentially some covered calls, even further out of the money ones, so at least you can get some capital, premium collected as you wait for a Meta rebound here. And again, markets are pushing those all-time highs again. So are we going to continue? Are we going to pull back? We are now full swing into earnings season. Some of the Mag 7 did great. Some of them not so much. So we shall see how this goes here. But I will say, I love that he bought shares because you could sell covered calls against it. I think Meta has a dividend maybe, so you can get some dividend as well. Income, which is absolutely awesome. So we'll see what happens. This person said, how effed am I on this trade? Another Meta trade here. Now, the difference with this individual compared to the previous one who put in $900,000 into it, this person put in almost $500,000 into this trade here. Now, what I have an issue with for these options here is that you're still giving yourself about 2 months. Okay. And 2 months going into the holiday season, we could have a Christmas Santa Claus rally, or we could not, depending on, economic factors, the government shutdown still happening, inflation, rate cuts. Jerome Powell was talking about it last week. We're not guaranteed to get a rate cut in December. We got the rate cut last week, but we're not guaranteeing one in December because now the Fed's in a tight situation here. So with that being said, we don't really quite know how the market is going to react over the next 2 months here. It's not a typical market. We have a government shutdown. We have inflation sticking higher than we want to. We have rate cuts because of the labor market. Like, there's all these different factors coming in. So I definitely would have given this a lot more time, in my opinion, because it would allow the options to have more time to go with you instead of against you. But what I would also think about doing, which again, this is not financial advice here, is that since you're buying these options, these call options here, you could, in theory, sell some covered calls here as a poor man's covered call, essentially, and kind of use that to kind of offset your gains. So if Meta does come down the next couple of weeks, you'll be able to capitalize on those capital gains at least. But 2 months to me, I think is just way too short of a time period. I'm looking at, usually 6 to 12 months for these kind of trades here, because it gives time for Meta to rebound. It gives time for more earnings to come out. It gives time for it to, push guidance and for breaking news and all those kind of things to play in your favor. But hopefully this works out for this person here. Again, a $500,000 position. Actually, it's $560,000. He's down about $39,000 right now. So shout out. Hope for the best for you, and hopefully make some money here. Break even's only at 665, and right now it's at 651. So not too much of a move you are looking for there. This person, see, this is where I'm talking about in terms of how you make a lot of money. This person bought Amazon call options here, but as you will see, they are dated for the year 2027 and 2028. 2027, 2028. Amazing, amazing option strategy here. And this person is now already up to $20,000 because Amazon had killer earnings, right? Now, even if they didn't have phenomenal earnings and their stock dropped like a rock, they could have bought in these options cheaper because, again, Amazon, you got 2 years almost of Amazon to go to 220. It was already at about 220, and you have almost 3 years for it to go to 230. So absolutely amazing plays here. He's just sitting here now, just enjoying the premiums, the capital gains here. He's not gonna, exercise them probably anytime soon. Maybe he'll sell off some of them. I'm not really quite sure, but that's an amazing strategy. Again, buying far out of the far out options, probably not out of the money, but far out option plays allows you to get the exposure to those upside gains, and also gives you that time that you want. So very, very nice. This person put in $380,000 into Poet $15 call options, and it's 100% of his portfolio here. The only thing, so he's got 2,800 options here, contracts. The only thing that I like about this trade right now is that it is expiring January of 27. So in 2027, he has time for Poet to go to $15. Basically, he's looking for an over 100% ROI on the share price here, basically, because his break even is here 16.31. So he's actually looking at over 2x the share price here in order to break even by 2027. Again, maybe he's very, very bullish on the company, it looks like, which is totally fine. If that's what he is, that's awesome. Again, what you could do if you're buying these kind of leap options here, the delta is actually not, these are like out of the money at 0.39. As you buy leap options that are deep in the money, because that way I get the movement of the stock basically almost 1-to-1. And you could maybe try to look at selling some poor man's cover calls against these here if you really wanted to, because say you sell, a lot of cover calls against Poet and it goes to $8, $9, you make some really good gains really, really quick. You can close out the trades, call it a day, and just move forward. But obviously, maybe he's not going to do that, and that's totally fine. Again, at the end of the day, it's all about what your option strategy is. So a crazy YOLO here for sure. Hoping it works out for him, but right now he's down about $13,000. Basically the price of my car in a day. It's absolutely crazy. All right. This person says, when you keep buying the dip. Now, I'm not ever against buying the dip, but I'm guessing he kept buying the dip on call options on Meta. And not only did he keep buying the dip, but his expiration date is for next week. So that's risky. Very, very risky strategy you're doing here. Could it pay off? 100%. And if Meta rebounds Monday morning, market opens, Meta rebounds and has a huge move up to the upside, totally get it. But right now, you have 1 week and also less than a week now, because as the weekend, the market kind of, is close to the weekend here. You actually lose more time as a result of this. So he's going to have, Monday, Tuesday, he's going to have only 5 days after the market opens for Meta to rebound $30, $35, which is, I guess 7% gain, it looks like, maybe, or something like that. And when you keep buying the dip, it's not bad, but I would have loved it if you kept buying the dip on leap options. He's averaging down, averaging down, averaging down. Buying the dip is not a bad idea, but average down on farther dated options or on share price itself. That's what my advice would be. Not financial advice, of course, but hopefully it works out. Again, these short-term options are very risky. I'm never someone who will trade a weekly option like that. But, these are people that have printed on Wall Street. These are people that also lose a lot of money on Wall Street. So you keep that in mind as we keep going through these strategies here. And again, if you're on Wall Street Bets like I am, just to kind of see what's going on, just be mindful. Read into the posts, read into the pictures. A lot of information gets kind of left out, I feel like. So keep that in mind. All right. This person has a lot of loss here. Gold 381 call options. So gold has had a huge rally this year and has had a recent pullback from $400. It's down now at like 360 something. And I went in on a gold debit spread actually for the end of the year. And so he had these options for $117,000 cost basis. He sold it for a loss of about 50%. And, it makes sense because, you're looking at about 2 months left here. as you start to have the time get closer to expiration, that decay accelerates. Okay, so even though it was worth 60,000 now, a week goes by, now it's worth 40,000. And another week goes by, now it drops down to 10 if it doesn't go in your favor, right? So those are a little bit of exaggeration, but you have what's called theta decay. And theta decay really ramps up in about a month or left before your options expire. So keep that in mind as you're trading these options, which is why if you're doing short-term option contracts, go within a small amount of your portfolio. If you're looking at leap options, you don't have as much theta decay at the short term. It takes a lot longer for that to happen. So, but again, gold, not a bad thing to have as a hedge. This is the SPY gold ETF, basically, which kind of tracks the price of gold essentially. So a lot of people have been getting into this one recently. I got into it recently as well. We'll see what happens with gold over the next couple weeks here, but only time obviously will tell. What Reddit post would it be this week without somebody else posting Beyond Meat losses? Okay. Last week, if you didn't watch the video from last week I made an entire Wall Street Bets page video about Beyond Meat meme stock and why I was saying that the rally is dead. It's over. Do not go into it again because look where it is right now. $1.61. And they have earnings coming up, I think, next week. So this person has lost $45,000 of Beyond Meat stock. Spend $70,000, lost $45,000, has $25,000 basically left over. That's crazy. Bought 15,000 shares. And it's one of those things where you can't. There's a couple more Beyond Meat ones in here, but you just can't. You can't make this up that, you want to try to buy in the hype. And this is where these are the people who get hurt the most. It's the retail traders. It's myself. It's other people who are watching this video is that with these meme stocks, just like GameStop, AMC, Open Door, Donut, Krispy Kreme, like those are the ones who've been getting rug pulled still when they have this meme squeeze, and it is a problem. So there's a couple more of these in here, believe it or not. This person made $400,000 on Reddit gains, which is crazy because they had earnings and they killed it. And look at his total gains. My dude has made over $2 million on Reddit. Not the website. In terms of not as a influencer and social media content person, just by buying the shares of the stock. He bought $1 million worth, it looks like. And now it's worth $3 million. He's up over $2 million on Reddit stock. That's amazing. That's absolutely awesome. I shout out to you, my friend. That's absolutely awesome. I love to see that. That is great things to see there. Okay. Here we go. We got another one here. To infinity and beyond, of course, because why not? He bought 48,000 shares for $78,000 total. Now, I don't know what I don't really do the math for what his cost basis is for this, but he's already down $1,000. That's pretty quick. It's pretty weird to lose $1,200 like that. And again, is he hoping for an earnings rally? Sure, maybe. But dude, I mean, this stock, and we had to talk about this in the last video, the volume has dried up so quick on Beyond Meat stock that's where the rally dies. You gotta look at the volume. When volume dies off, stock is dead. And that's where it is. Beyond Meat went from $7 something, I think it was at least $8 at one point pre-market, down to $1.61. So, crazy stuff. But, hopefully it works out for you. You never know. Sell some cover calls. You have 48,000 shares. Sell cover calls might help you out. I don't know. All right, so this part is absolutely crazy. So in taking a look at this individual here, there's a lot to break down here. So this person here puts it on Wall Street Bets that he has a $6.5 million margin call here by trading a put credit spread. Now, let's break down this idea here as we are continuing the Wall Street Bets crazy trades of the week here. Okay, so put credit spreads that you're looking at, which is what he had right here, basically means that he was selling a put option and then he was buying the lower put option as a result to create a spread between the options here. All right. So as you're taking a look at how that works here, basically he was selling, and this is where you have to really understand how spreads work here. Okay, he was selling a put option at 320 for NVIDIA, which just means that if it goes to 320, well, as a put option, if it's at 320 or below, then the buyer can exercise his shares off. Basically, you are telling the buyer, hey, I will buy your shares of NVIDIA at $320. Now, keep in mind that right now NVIDIA is trading at just a little over $200. So, of course, the buyer's going to exercise it and early assign it right away because at some really good money that someone's making there at selling at such a high cost, which is crazy. Now, the bought option that we have here is kind of what offsets this as a result, and it creates what's called a spread. So the spread between the 290 and 320 is about a $30 spread, as you'll see right here. Now, what is the actual loss here? So, yes, he had been assigned $320. He has bought basically NVIDIA at $320 times 100 shares times the 225 contracts. That gives him a total cost basis of $7.2 million. Okay. And then again, you're like, oh, frick, how does he even have all this money? Like, what's going on here? Like, how did Robert even let this happen here? Okay. So here's what happens. Okay. Since he was forced to buy the shares here at $320, he's going to be forced to exercise the long position on Monday morning. So he will be exercising this because this right here counts as, almost like collateral to offset this one. All right. So what does that mean? Well, how much money was actually lost here? So he paid $30 for each contract times the 225 contracts. And again, it trades in 100 share increments. So this would cost him $675,000. Now, he was paid a credit of $674,756. As you'll see, he got paid this credit right here, which means that he actually, even though he got paid $674, he's going to lose $675. He actually is going to lose about $244 plus interest because of margin, plus the fees he pays, about $20 for closing the positions out here, or whatever the case is. So even though this Robinhood platform tells you, hey, you owe us $6.5 million, that actually isn't the case. Monday morning will open up. He's going to be paying interest on the margin that he's been taking out money on, which kind of sucks, obviously. It might be a couple thousand. And they're going to close out the other leg of his trade. Now, this is what we say you have to understand how stocks work, how options work, and how strategies work. If you don't know how these strategies work, do not trade them, because put credit spreads are designed to be sold below the strike price, not above it. He sold it way above it. No. Call credit spreads, you go above. Put credit spreads, you go below. An absolutely insane margin call at first glance, but when you look at it, he is covered in this trade here. He's only going to lose about $300. Give or take, obviously, your fees and interest and all that kind of stuff there. So, but just a crazy trade here. And if you fully get when you see this, do not trade advanced strategies. That's just my 2 cents. Move on to the next one. This person here. Whoa, look, we're beyond meat. This person's down $39,000. Oh, dear Lord. They're beyond meat, down $39,000. Yeah. Sure, there's another one there. Love that. This person lost their life savings since May. Do not put your life savings into trading options. Put it into a Roth IRA. Put it into a 401k. Put it into any kind of index, stock, whatever. Not options. Goodness gracious. This person did a good job. He's a Palantir millionaire. He's now net liquid $1 million for Palantir, and also his profit loss is $916,000. So this dude put in about $100K worth into Palantir, and now he is worth over $1 million. Shout out to you, my friend. Absolutely awesome. Anybody want a piece of these dad boys? Oh, look, this dude bought more shares of Beyond, and look at the average cost. Oh, $7 is crazy. Now, again, it's not a lot of money, But there's probably somebody out there who's lost tens and thousands of dollars, even 100,000, but he bought right at the top and, people loved it. They ate it up and they took it out from underneath them. Beyond meat. This one says either 800K or zero, I ain't selling. And he bought NVIDIA 320 call options for April of next year. Now, again, like I said, NVIDIA's at like $200 right now. To go from like 200 to 320, you're looking at over 50% move between now and April of next year. Is that likely? Probably not, in my opinion. But also the fact that he says either 800K or zero, I'm not selling. That's not good portfolio and position management. You have to know how to manage your trade. That is not a way to do it by saying 800 or nothing. You put $40,000 almost into it. So what are we doing here? Like you can't just be like, oh, 800 or nothing. Like you're risking 40 grand. If it comes down against you, sell it for a loss, take someone off the table. Don't say 800 or nothing. What if it goes up to 400? I'm not going to sell it still. So I hope he actually manages this position here because it's very unlikely to happen already. But if he does start making some profits, I'm hoping that he's going to manage it and take money off the table. In my opinion, I would hope so. Okay. This person said, I waited 4 years to break even on Nokia. Closed my position with a 27% loss. A few more days would have made profit. And Nokia was a company that recently had a partnership announced with NVIDIA, and it skyrocketed through the roof. And again, in a small position, it was $1,000. Like, not the end of the world here, right? But what I like about it is the title because it brings up this idea of how would you know Nokia would partner with NVIDIA after you sold? Nobody would know that. Okay. Nobody would know that. At least retail wouldn't know that Nokia is going to partner with NVIDIA. Nobody knew that, right? You could have sold for a 27% loss. And then what could have happened is that they could have had some awful news. They're going to announce bankruptcy and it loses even more money, right? You never know on either side of the coin where you're going to fall. You have no idea. So, hey, you sold it off. You took your money out. Maybe long term, maybe it actually is better that you did. Obviously we can always look back and be like, I regret selling, but that we all have that. It happens all the time. This person right here, over $1 million return in SoFi stock, bought in at $10, and now it's obviously worth like $30 or something like that. And he also bought options as well. That's crazy returns. And he's got 300K plus on options in here as well. Absolutely wild. Here you go, guys. Ooh, down another 40,000 in Beyond Meat stock. And that's at 181. Now it's like 160, I think, or something like that. So even more of a loss. And then the last one for the day here, over 125,000 loss on Beyond Meat. Yeah. So crazy week in the market here. Thank you guys so much for watching today's video. If you did make fun of the video, make sure that you like the video, subscribe to the channel, turn on those bell notifications as per usual. I always want to make money in the market in some way, shape, or form. Please stay away from these meme stocks or put money in that you can afford to lose. And as always, I will catch you guys in the next video.